What's going on, everyone? Today is September 28th. Fed meeting last Wednesday did not do good for rates. That's another video. I'll link it up here somewhere. But what we're really going to talk about in this video today is the housing market crashing. I keep hearing that. I keep hearing about the big correction that's coming, more so in the last week than ever. And I think that comes off of rates going up. If rates go up, that'll kill demand, and that'll mean that home prices will go down. Well, that would make sense if there wasn't a huge housing shortage. So a friend of mine sent me this video last week by YouTuber, millions of followers, he does do some great content on stock trading and other things. He did a video about the inevitable crash. Today I'm going to show you why I think it may not be the best move to focus on home price. You see, for most of us, large majority of us, we're not paying cash for a property. But psychologically, anything we buy in our life, we always think of the price tag, right? What does it cost? What does it cost? When you're buying a house and you're using financing to do so, the home price is not as important as the price of the money. So if rates rise, and they have to, rates have been sitting so low for so long, we've been over a year at these rates with a 30-year fixed hovering sub 3%, we'll say. With rates being so low for so long, they have to go up. And that's what the Fed announcement was last week is, hey, come November, we're going to start pulling back a little bit on our bond investments we've been making. They started doing that last March to stabilize trading the economy. It was a train wreck back then, but it did its job. So let's look at the options, because before you go, aha, I'm going to hold out and I'm going to wait for home prices to go down. Well, what if I told you that waiting for a home price to go down was actually going to cost you more money? Let me show you how it works. What I've modeled out here is the current market, and this interest rate is from last week. By the way, I'm using $1 million because it's a nice round number. I know that home prices can be above, below that, but $1 million, 100,000 is not enough. $1 million, maybe it's too much, but that's what we're going to use. So at $1 million today, or last week, I guess, 2.75 would have been the interest rate on a 30-year fixed. We'd be borrowing 800,000. So we're modeling out putting down 20% here. The monthly payment is $4,407, and the total cash to close, including closing cost estimates, is $211,000. Okay, so we have $1 million purchase price. 20% down gives us a loan amount of $800,000. I used last week's interest rates because I built this last week, and we were at 2.75%. Now, the payment there would have been $4,407.60. That means your cash to close is $211, 20% plus closing costs. So that's where we are currently. Really, I mean, that's last week's interest rate, but let's say it's 0.25% higher today because it's already started. So it kind of helps to support what I'm showing you guys right now. Now, again, we're hoping prices drop. So what happens if prices drop, but rates go up 0.75%? What if the rate went from 2.75 to 3.5? Now, psychologically, 3.5 sounds like a high rate now. But remember, January of 2020, pre-COVID pandemic, 3.875 was the going 30-year fixed. And I was telling everyone this is the lowest rates we'll ever see in our lifetime. And then we got to 2 7/8 and 2.625, and we said this is the lowest rates we'll ever see in our lifetime. So all I'm doing here, I'm not picking some random rate. I'm using historical data. January 2020, rates were at 3.875. Only thing that drove them lower was pandemic. Now, I'm not even going to go that high, and watch what happens if prices decrease. So if the prices drop, take $1 million price, we have a $20,000 dip in prices. And by the way, what you have to remember here is the market is increasing so much that I think it would take quite a shift for prices to go down. When I bought my house in February, there was 15 offers. If demand went down by 50%, there's still 7 offers. And if demand went down by 75%, there'd still be 3 offers. So we're looking for a pretty dramatic shift in supply and demand here. One way or the other. We need either millions of houses to show up, or we need millions of buyers to go away. All that being said, $980,000 price, we have a $20,000 reduction. Interest rates go up by 0.75%. We're already up 0.25% from where we started last week, hovering around 3, but let's just go up another 0.5% for an example. My monthly payment is $4,641. That's over $200 more. So the house price went down $20,000, but my interest rate caused my payment to go up $200 a month. Now let's look at it another way. What if while we're waiting for prices to drop, prices stay the same, but rates continue to rise? In that scenario, 3.5%, same price we had, $1 million and still at $1 million, but same interest rate we used here. Now the payment's $4,734. So now I'm up $300 from where I'd started because I was trying to beat what was currently available to me. And now the worst case scenario, what if rates go up and prices continue to rise? Remember, 15 offers, Demand goes down by 50%, that's 7 offers. Demand goes down by 75%, that's 3 offers. Still people competing for the same home. In that scenario, so you did a $50,000 increase. Loan amount would be $840,000, interest rate of 3.5%, keeping this all consistent. Now my monthly payment's $4,965. So this is what I get concerned about when people say, I'm waiting for a crash, I'm waiting for prices to drop. The reason we say that, and it's logical, anything we've ever wanted to buy, we want to get it on sale, right? So it makes sense. And I think a lot of times we attribute this to stocks as well, because we're making an investment. But you can day trade stocks. You're not going to day trade real estate. Real estate is a long-term investment, and really, it's something you're living your life in. You have your lifestyle around that piece of property or that investment, and it's just making you money while you're living your life. So while we see rates rise, I think there's more gamble in waiting for prices to drop because I don't know what is going to create that supply and demand shift. So my 2 cents, I hope it's helpful. If you guys have questions, if you don't agree with me, I love talking about this stuff. So let me know how I can help. Thank you so much for watching, and I'll talk to y'all soon. Cheers.